So in our lesson today, we're going to talk about and learn how to calculate our real estate or our property taxes that you might hear it called. So we're going to look first at some vocabulary. So when you get these words, and I'm going to ask you to write those down, you might need to pause the video to do so. So our first term is real estate taxes. So real estate taxes are the taxes that's collected by the city or the county from homeowners to pay for roads, parks. The majority of it goes to schools, but it also goes to government offices and other services. So this is taxes that you pay yearly on the property that you own. Whether you have a home on it or not, you have to pay taxes on that piece of property. So we're going to talk about different values here. So you're going to have an assessed value. So an assessed value is actually just a portion of what your real estate, your property, or your home is actually worth. So the city or the county will come in and have a tax assessor assign up to your property for taxation purposes an assessed value. And again, this is usually a portion of what you could actually sell that property for. So when you look at putting that property on the market to be sold, or you're looking at purchasing property, you're going to look at a market value for that property. That number is going to be much higher than the assessed value. You would think that these two things should be equal, but they usually are not. The assessed value is usually smaller than the market value to which you can sell that property or which the value at which you buy that property. So these two values are not equal. The assessed value is always a little bit smaller than the market value, which is good for you because then you're paying less taxes on that property than it's worth to sell. Okay, so we're going to look at the rate of assessment. The rate of assessment is the percent of a property's market value that is taxed. So that's going to be maybe 30% or 10% or 8%, whatever they assess your property to be taxed at. Then you're going to have an actual tax rate. Now the tax rate is typically put into what's called millages. And the millages, so a tax rate is the percent of income sales or property value collected in taxes. The tax rate on property is sometimes expressed in mills per dollar of the property's assessed value. Now we do a lot of items as percentages. Percentages are always calculated out of 100, but a millage, usually shortened by mills, is out of 1,000. So instead of per 100, it's going to be per 1,000. So if you look at 1 mil, if I divide 1 by 1,000, that gives me 0.001, and that would be the tax rate of that property. Okay, so we're going to need two formulas today. So we're going to start with a market value of your property. And to calculate the assessed value, we'll multiply that by the rate of assessment. So that just values how much of your home will be taxable. And then we're going to calculate the real estate tax. So we're going to take that tax rate that we find with our millage. So if it's 5 mills, it's 5 divided by 1,000, and we're going to multiply it by that assessed value that we calculated. So you can see that we're not taking the taxes on the entire value of your home, just the assessed value. All right, so let's look at our first example that we're going to walk through together. So the Madison County tax assessor determined the Smith family home has a market value of $280,000. The rate of assessment in the county is 40% of market value, and the tax rate is 50.73 mills. Calculate the assessed value. So for the assessed value, we're going to start with that $280,000, that market value, and multiply it by 40%. That's what the tax assessor set the rate at. When we do that calculation, the assessed value is $112,000. So what the difference is between these two numbers is this is what you purchase the home for, or this is what the home sells for, but this is the amount that is taxable, only $112,000. So now we're going to write the tax rate as a decimal. So this tax rate is 50.73 mils. So we'll take the millage, and instead of dividing it as a percent, we're going to divide it by 1,000. So we're going to move that decimal 3 places to the left, giving us the tax rate of 0.05073. Now we'll calculate our real estate tax. So this is what gets paid in your taxes, sometimes only once a year. Sometimes there's a spring tax and it's broken into the spring and the fall. And we'll take that millage rate, 0.05073 times $112,000, and that gives us a real estate taxes of $5,681.76. Now that seems like a very high payment to have to pay in one payment. So if you already have a mortgage set up, what your bank will do is it'll divide this into your mortgage payment. So they would take that divided by 12, and they would actually you would pay the bank that real estate taxes. That gets put into what's called escrow into your mortgage. So we'll talk about what escrow is and what that contains in our next lesson. All right, so let's look at our first concept check out of the book. So it says the tax rate for a certain property is 65.5 mils. The market value of the home is $70,000, so that's what it sells for. And the rate of the assessment is 40%. So let's find the assessed value. So the market value is $70,000, and we're going to assess it at 40%. So that means only $28,000 of that home's market value is being taxed. All right, so the millage here is pretty high, 65.5 divided by 1,000. That's going to give us a assessed tax rate of 0.0655. We're going to move that decimal 3 times. And then we'll calculate the percent times the assessed value. And that's going to give us real estate taxes owed of $1,834 total. Again, that would be broken down into either 1 or 2 payments, or you can add that to your mortgage and divide that into 12 payments. All right, if you have any questions, this is what it looks like to calculate your property taxes. So numbers that are important for you to know is what your millage rate is in your area, and also what the tax assessment rate would be. So that's that 40% number. All right, if you have any questions, please let me know. I hope you all have a great day.